Hi, this is Zak Mir with the Bulletin Board Heroes here at Zaks Traders Cafe for Friday the 28th of February. Starting off with the FTSE 100, which seems to be casting aside any doubts or fears regarding Trump tariffs and edging towards the record high levels around 88.20. Still looking at the top of that rising trend channel from the end of 2023. By the end of next month at now 9,030, while we're above the January uptrend line there, 86.55 or so. RSI at 63, bounced above neutral 50, a leading indicator on the upside, and that's what's happened so far. Worst case scenario at the moment, I suppose, at the moment looks as though it would be 8600, the initial January resistance. Moving on to the DAX, and here, consolidating well at and above the last gap there, around 22,200. Above that, we're looking at the top of that rising trend channel from back in November, as high as 23,300. By the end of next month or even sooner. Moving on to the Dow, which has been the laggard amongst the big three indices, and here still trading either side of a falling 50-day line, so struggling in terms of finding resistance at old support near 43,900. Below that, we have the risk of a test of that rising trend channel from March last year, 43,000 basically, and the top of that gap higher that we had back in January. RSI in a bad place at 37, so that does suggest we are due a test of the price channel floor. Early and end of day close now above recent resistance, 43,900. Gives us a route to the record highs, 45,000, and the top of that rising trend channel from March last year, 46,600 is a best case scenario target, still by the end of next month. Bitcoin is next, and here the rug was well and truly pulled with the hacking, etc. And back below the 200-day line, that was the worst case scenario. We've actually gone below that, 81,800. RSI at 21, so the most oversold we've had in a long time. I suppose for those who like Bitcoin, having the RSI near the 20 level and well below oversold levels is an opportunity. We haven't been that oversold since back in August last year or July last year, both those times were buying opportunities. End of day close above the 200-day line would take us back to the old support on the way down at 85,000, which actually has been the resistance today. Worst case here, probably a move down to the low 70,000s, because that was the resistance between March and November before the Trump takeoff that we had for this market. The other point to note is we had multiple failures at RSI 50, and they proved to be as bad as actually that setup and that leading indicator actually is. Not so terrible at gold, but still trying to test for support there. 28.75, the number there. We were looking for a support in 28.79 low yesterday. While we're above 28.75, they're looking for a move towards the top of that channel there from February last year as high as 30.20 by the end of next month. Worst case now is that we've got to test the 50-day line and the old October resistance around 2800 before heading higher again. RSI is still trying to hold on to that neutral 50 level, doing that just at 53. Moving on to the stocks, and quite pleased with them in the sense that there's hardly any, there's relatively few good situations on at the moment, but the few that we have had a good feeling on actually have come true. The first one is Aminex, where rising 50-day line and a break of that resistance line there from May. We're supposed to lead up to the 200-day line, which was basically done. Next target here up to 1 3/4 pence by the end of next month, and backed by bullish divergence in the RSI window. A real winner over the last couple of weeks. I think it started with our friends at Investors Chronicle, who actually got one right here, but the shares have doubled here since the beginning of the month. Initial target here was 6.6 pence, and looking for 10 pence now by the end of March, while we're above 6.6 pence. Moving on to Block Energy, a company which I used to interview quite a lot in the good old days a couple of years ago, but shares down from their peak last April, but looking to recover. We've broken neckline resistance. We've had two gap close buy signals. If you look closely, and we've got a rising 50-day line double bounce off the 50 RSI level this month, so that's a leading indicator on the upside, and looking for 1.2 pence the longer we stay above the 200-day line at 0.9 pence. So weekly close above that today is what we're looking for. Moving on to First Class Metals, which looks as though it is turning itself around. We've had quite a few strong candles. A strong candle means open the low, close at the high, and it looks like we might get that today. 50-day moving average starting to rise, RSI 50 rebound or above RSI 50, and top of the rising trend channel base there at 3.2 pence, which we're looking for by the end of next month. On to Great Southern Copper, a company which I'm for some reason very enthusiastic about. The reason on a charting basis is that 50 and 200-day lines are both rising. We've had good copper grades, I think, earlier in the week, but broken neckline resistance of 1 3/4 pence. And looking for the top of a rising trend channel there from back in May last year. That's heading for 3.2 pence, which we're hoping for by the end of March or much sooner. You can see that's obviously the top of the range there. But the unfilled gap to the upside on Wednesday, a very good signal. And as you can see, very strong candles there on the shares. Another obscure winner is ITIM, where I had the feeling that this was a winner yesterday, and it's turned out to be so. Unfilled gap to the upside, rising 50 and 200-day lines. Top of the channel there, the initial target there at 65 pence. But actually you can see there's plenty more potentially to go. Looking for something like £1 by the end of April, which is the upper parallel of that rising trend channel base. So let's see if ITIM can deliver the goods. Like to see the shares above the old resistance from October at 53 pence on a consistent basis, but the unfilled gap to the upside and breakout should take this all the way, especially given that we already had one back in September. On to Metals One, another one where the degree of difficulty was very high indeed. The shares basically now a very steep downtrend, but gap closed by signal. We had the feeling that there was bullish divergence would lead to a push to the upside, and that's what we've got. Still looking for 0.65 by the end of next month, while we remain above the 50-day line there at 0.37, and after the RSI 50 rebound that we had last week. Don't normally look at naked wines, but couldn't resist it today, especially as there's not much to look at anyway. Here we've got the shares trying to regroup after a rather calamitous fall. Top of the channel they're heading for 90 pence, which could be done by the end of next month. What's encouraging here is the way that we've got both the 50 and 200-day lines rising. They're probably a couple of weeks away from a golden cross. Multiple strong candles there over the last couple of weeks, and it looks as though we could get up to 90 pence while we remain above recent resistance at 60 pence on that stock. Finishing off with the punter's favourite, Upland Resources, where it's risen on no news, I think, over the recent past. Just check on that, but I don't think we've had any news of late. Warrants exercise doesn't really count. So here we've got the shares hitting our initial target there at 1.5 pence. Above that, we've been looking for 2.2 pence by the end of next month. It looks as though the shares might get there a bit earlier than expected, and it's just interesting that this tends to be somewhat leaky stock. RSI rebounds above neutral 50 as well, and as I said, looking for 2.2 pence over the near term. That's it from me today. More updates over the weekend.